Hey there, welcome to my channel. Think back to 2020. The pandemic closed offices, pushed everyone home, and unexpectedly kicked off one of the wildest housing runs in modern Canadian history. Ontario's market went from "this is fine" to bidding wars, waived inspections, and price records in a matter of months. Today we'll unpack how that happened, why it cooled, and what might come next. This is my weekly content on finance and real estate. Viewer-suggested topics always welcome, and a special shout-out to a viewer for this topic suggestion. So, let's start with the boom from 2020 through 2021 and into 2022. Historically low interest rates. A flight from dense rentals and new household formation fueled an enormous surge in demand. Buyers, especially in Ontario's big centers, jammed the market. Sellers responded slowly because construction and new supply had already been constrained. The result, record price appreciation and very low months of inventory in many neighborhoods. Now, two big mechanics drove the boom. 1. Ultra-low mortgage rates made monthly payments much cheaper on paper. 2. Shifting preferences, remote work, and a desire for more space pushed buyers from downtown condos to houses in suburbs and outlying Ontario markets. Add strong immigration targets and rapid population growth in 2022 to 2023, and demand far outstripped supply. Then came the other shoe. Inflation rose globally in 2021 to 2022, and central banks, including the Bank of Canada, began a cycle of aggressive interest rate hikes to bring inflation down. Higher policy rates translated into higher mortgage rates, sharply reducing buying power and cooling demand. By 2023 into 2024, the market was clearly rebalancing. Fewer, frantic bidding wars, more listings, and a pullback in average prices in many Ontario segments. By mid-2024 and into 2025, we started to see signs of stabilization. Rates eased a bit as inflation moderated, and some buyers returned, especially cash buyers and those who had been waiting on the sidelines. But affordability remained a central issue because prices were still high relative to incomes and mortgage costs. At this point, a simple way to think about the market is that demand has fallen, notably from its pandemic peak, but remains elevated relative to historical norms, and supply hasn't quite caught up yet. So before we get to the outlook, let's review some key factors that could tip the balance between tighter supply and looser conditions. Monetary policy and interest rates. Interest rate moves are the single biggest short-term driver. When the Bank of Canada tightened, borrowing costs rose and demand fell. When policy eased into 2025, some pressure lifted, but not enough to restore 2020-era affordability. Expect the housing market to follow policy directions: low growth if rates stay elevated, firmer activity if cuts come. Inflation and real incomes. High inflation in 2022 to 2023 eroded purchasing power. Wages have risen, but not uniformly, so real affordability is still poor for many buyers, especially first-time households. Supply constraints in construction. Canada and Ontario have long been short on supply. Builders increased starts, but land costs, labor shortages, and regulatory timelines slowed deliveries. CMHC and housing starts data show modest increases in 2024 to 2025. But housing completions still lag long-term needs, especially for ground-oriented family homes. Population and immigration. High immigration levels record permanent resident admissions in 2022, and elevated temporary resident numbers added tens or hundreds of thousands of new households that needed housing, especially in Ontario's major metros. That's structural demand that's hard to offset quickly. Global factors and trade. Global inflation, supply chain interruptions, and geopolitical risk indirectly affected Canada, too, pushing construction costs up and creating uncertainty for investors. Tariff disputes and trade disruptions can reduce economic growth and dampen buyer confidence, which filters into housing. And finally, behavioral structural shifts. Remote work, investor activity. Remote work changed location preferences and lengthened search horizons. At the same time, investor activity waxed and waned, depending on tax, regulatory signals, and returns from other asset stocks, rentals. So let us zoom into Ontario specifically, because the province didn't experience the same dynamics in every market. The GTA and hot commuter markets like Niagara saw the largest price swings, big upside in 2020-22, and noticeable correction later. Smaller and more affordable Ontario markets had different timing. Some saw sustained demand as buyers fled high-priced urban markets. Others cooled as local economies slowed. By mid-2025, CRE data showed provincial sales values recovering year over year in some months, and inventory rising closer to long-run averages, signaling a market that's moved from seller's market toward a more balanced market. Though affordability and inventory composition type price point still matter. Okay, now let's look forward. What does the next 2-3 years hold? I'll give you 3 plausible scenarios in what they mean for prices, sellers, and buyers. So scenario 1, The base case, slow recovery, rebalancing. Most likely, if inflation stays near target and rates fall modestly, prices drift modestly upward or stay flat in real terms. Sales pick up, inventory normalizes, and rental markets gradually rebalance as new supply completes. This is the most likely path if the Bank of Canada eases a little, because inflation is under control and growth is modest. Scenario 2. Soft landing upside. If rates fall quicker and jobs strengthen, if policy eases more aggressively, affordability improves, and more buyers re-enter. That would push prices higher, again especially at entry and mid-price point if supply isn't keeping pace. And Scenario 3, downside recession. If global shocks or trade disruptions cause a downturn, higher unemployment and weaker incomes would cool demand further. Prices could stagnate or fall in vulnerable segments, higher-priced markets or areas with weaker local economies. An important caveat: structural drivers, population growth, and limited land supply mean long-term pressure on prices still exists unless supply increases dramatically. So even in a downturn, long-term fundamentals point to recovery once economic conditions normalize. So practically speaking, here are some takeaways for each of these scenarios. For buyers, focus on affordability, stress-test mortgage scenarios. Pick locations with employment resilience and consider long-term hold horizons. For sellers, pricing and presentation matter. If markets are balanced, well-priced homes sell quickly. Overpriced listings sit. And for investors, watch rental yields, new supply pipelines, and regulatory risks, zoning, taxes. So overall, the forces driving Ontario's housing market have shifted since its white-hot pandemic peak, but haven't reversed entirely. New household formation driven by high immigration continues to underpin demand. But affordability constraints and tighter financial conditions have put a brake on price growth. At the same time, supply delivery remains constrained, which means the market will remain sensitive to changes in demand. So the next few years will be interesting. If global and domestic conditions stay reasonably calm, Ontario will continue to see modest price growth, maybe with a little volatility depending on how monetary policy plays out. A big global shock, however, could easily tip the scales in favor of buyers, particularly if it causes job losses. In any case, it is worth remembering that real estate markets are highly local and provincial averages can obscure big differences across cities, neighborhoods, and property types. So looking ahead, keep an eye on how specific markets within Ontario navigate the forces I outlined today. Local conditions vary a lot, and understanding them is critical for anyone involved in the housing market. Anyway, that's all I got. Thanks for watching. I'd love to hear your thoughts. Drop a comment to keep this content going, and don't forget to link and subscribe to my page. Thanks. For more cool stuff, hit my website link in the description, and I will be back with a new episode next week, and I'll see you then.